You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Tuesday, June 18th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Tuesday. The first thing to know is the ECB flags more easing as Fed meeting kicks off. European Central Bank President Mario Draghi gave his clearest hint yet of further stimulus at a forum for central bankers in Sintra, Portugal on Tuesday. He indicated if no improvement in Eurozone inflation occurred, further interest rate cuts or asset purchases would be required. Draghi's comments come as the Federal Reserve kicks off its 2-day policy meeting on Tuesday morning. While markets do not anticipate any changes to be made in interest rates when the decision is announced Wednesday, expectations are high that persistent worries over economic fallout from the U.S.-China trade war could prompt the Fed to open the door to rate cuts later this year. Fed fund futures currently price in the chance of a rate cut in July at more than 80%, with the probability of 2 more cuts by the end of the year above 50%. The second thing to know is stocks get a boost from hopes of central bank easing. European stocks and U.S. futures turned positive after Draghi sparked hopes that central banks would ease policy to support a weakening global outlook. The Euro Stoxx 50 gained 0.9% at 5:49 a.m. Eastern, while in the U.S. the Dow futures were up 53 points or 0.2% at some point pre-open, and the S&P futures were up 7 points or 0.2% at some point pre-open. Bullish sentiment for stocks did not dampen demand for safe haven bonds as investors continued to bid up prices. The yield on the U.S. 10-year Treasury, which trades inversely to prices, slid 4 basis points to 2.05, its lowest level since September of 2017. The third thing to know is oil prices dropped for the second day ahead of U.S. inventory data. Oil prices fell again, weighed down by worries that global economic growth is being hit by the U.S.-China trade war and by caution ahead of weekly data on U.S. crude stockpiles. The American Petroleum Institute's weekly report on U.S. crude stockpiles is due at 4:30 p.m. Eastern. The reading comes ahead of the official report from the Energy Information Administration. Although expectations are for a draw of 2 million barrels, inventory surpassed to the upside in the previous 2 reports. Losses in oil were limited, however, by tensions in the Middle East after last week's tanker attacks, as U.S. President Donald Trump confirmed reports last week and sent 1,000 troops to the region. The fourth thing to know is Boeing records 0 new orders and confusion over 737 MAX rebranding. The ramifications of the 2 fatal crashes of Boeing's 737 MAX that grounded the model worldwide continued to make financial headlines. Boeing failed to announce a single new order for any of its airplanes in the first day of the Paris Air Show, while rival Airbus recorded orders and options for 123 planes, according to CNBC. Boeing Chief Executive Dennis Muilenburg had insisted that the priority at the Paris Air Show would not be orders, but rebuilding faith in its fleet. Separately, after Chief Financial Officer Greg Smith told Bloomberg that he would be open to a name change to the 737 MAX, the company hurriedly told Reuters it was not currently working on plans to change the name. The fifth thing to know today is Facebook unveils Libra digital currency project. Facebook announced further details on Tuesday of its planned digital currency Libra, which it expects to go live in the first half of 2020. The Libra currency, designed as a blockchain network backed by other assets, will not be owned by Facebook itself. Mark Zuckerberg's company will lead a consortium developing it that will include payment companies Visa, Stripe, and PayPal to help spread acceptance. Other tech companies such as eBay, Lyft, Uber, and Spotify were also reported to be on board. Facebook will look to profit from the launch with a new subsidiary called Calibra, a digital wallet designed to store and exchange Libra. Our second story today is from MarketWatch.com. Surging Netflix stock snaps a losing streak after analyst foresees U.S. subscriber number topping estimate. Shares of Netflix Inc. surged Monday to its first gain in 6 sessions after a Piper Jaffray analyst said he expects the video streaming giant to beat second quarter U.S. subscriber growth expectations. Analyst Michael Olson said, while a preliminary reading of his Netflix search index, which is based on an analysis of search trends utilizing Alphabet Inc.'s Google, points to year-over-year 11.7% growth in U.S. subscribers, while Netflix guidance called for an increase of 8.2%. For international subscribers, the index search suggests 45.8% growth, while guidance called for a 36.5% rise. The stock, Netflix, jumped 3.2% to snap a 5-session losing streak in which it shed 5.9% that marked the second longest losing streak of the year after the 6-day streak that ended May 13th. And our third story today is from agriculture.com. 1/4 of U.S. soybean crop remains unplanted, USDA says. The U.S. soybean is slightly more than 3/4 planted, while the corn crop is emerging nearly 20% slower than its 5-year average. In its crop progress report Monday, the USDA pegged U.S. corn planting at 92% complete, behind the 100% 5-year average. The planting rate is equal to what the trade had expected. This leaves about 7 million acres left to be planted. As of Sunday, Ohio farmers had 68% of the state's corn crop planted versus 100% 5-year average. South Dakota farmers have 78% of their corn seeded, behind 100% 5-year average. Also, 79% of the U.S. corn has emerged versus 97% 5-year average. In its report, the USDA pegged the corn crop as in 59% good excellent position, equal to a week ago. Our final story today is from investing.com. EU trade surplus with US and deficit with China is larger. The European Union's trade surplus in goods with the United States increased in the first 4 months of 2019, while its deficit with China widened, figures that could further strain global tensions. The European Union's surplus with the United States grew to 48.2 billion euros in Jan to April of this year, from 46 billion euros in the same period of 2018. This is from EU Statistics, the EU Statistics Office Eurostat. They reported that on Tuesday. With China, the EU's trade deficit expanded to 62 billion from 57.2 billion euros. The United States has hit the European Union with tariffs and threatened more in complaint over the trade balance. Both Washington and Brussels have also complained that China wants free trade without playing fair. Overall, the goods trade deficit of the 28-nation bloc increased to 21.7 billion euros in the Jan-April 2019 period from 10.3 billion a year earlier. Energy imports were the chief cause of the deficit, especially from Russia and Norway. And that, ladies and gentlemen, is news you can use for today, Tuesday, June 18th, 2019, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.